The next slide is 1099Ks. Man, there's a lot. There's a lot we could say here. A 1099K is a form issued from a third party payment processor. So debit card, credit card, there's so many of these nowadays, Venmo, Apple Pay, Cash App, Zelle, you name it. You know, a ton of them. This sounds really strange, but if you make a payment outside of a check or an ACH, that doesn't count towards payments that you have to issue on your 1099 NEC. That's not part of what you're tracking on these 1099s that you have to issue. And that can make things really confusing. What's nice is QuickBooks is our standard accounting software that we use. QuickBooks is already going to pull those out at the end of the year, say, nope, you paid that by credit card, you paid that by Venmo, they're not going to count it. So whatever accounting software you're using, double check and make sure that it's not counting debit, credit, third-party payments in 1099s that you're tracking and paying for non-employee compensation. The reason that this is the case is because when those payments are occurring from a third party, the IRS looks at that as Venmo has paid that contractor, Visa has paid that contractor, not you. There's actually and then there's one step in between you and that person. That Venmo is actually fulfilling that payment, and so Venmo needs to send them that 1099K if they reach a certain threshold. So that can create a lot of confusion, because if they hit that threshold where they get a 1099K from Venmo and you send them a 1099 NEC and both of those go to the IRS now and they aren't aware and you're not aware, they could actually double report and over report their taxable wages, and it's not correct. So that's this is something that can create a mess on both sides. The IRS has talked about phasing this down to they're going to phase it down to $600 a couple years ago, and they got so much pushback that they delayed it, and then they delayed it again. And as it stands right now, they are going to phase it down to $5,000 paid for services or sale of personal property will be issued a 1099K if it's paid through one of these methods on the slide for tax year 2024. As it stands for 2023, you will only get a 1099K if you have received payment from a third-party payment processor if you meet both criteria, that it was more than $20,000 and 200 transactions. That's a pretty high bar for a church to reach. I'm trying to think of a scenario where you would pay a contractor via one of these methods more than $20,000 and more than 200 times. So this really becomes less of a 1099 issue and more of an internal controls issue. So I won't spend a ton of time on this. I would just say, just as a general something to think about, is if you're going to use these other methods of payment, think about, does the ease of payment and not having to issue 1099s make it worth not going through the more traditional check request, cutting, and issuing payments? Do we have the right controls and approvals in place? Can we report on it correctly? Do we know we're paying the right person in Venmo?